All right. So with Bitcoin typically acting as a, I don't know, what do you call it, canary in the coal mine for
Yeah.
markets, and in these types of situations, typically we've seen Bitcoin sell off to a much greater extent than it has. I think there one of two things could be happening here. Bitcoin is Bitcoin's muted price performance here is indicating that we're not going to see that much volatility when the markets open on Monday, or Bitcoin is decorrelating from markets finally, and participants are seeing, okay, Bitcoin maybe actually is a hedge here, or an asset that you might purchase in this environment.
Yeah. So that was my initial thought when I saw the chart. I think we could probably maybe take a step back and see what are the like major things that could or are likely to happen. So the number one thing is usually this any kind of kinetic conflict causes a risk off impulse, especially around oil. So you'd have volatility up, you'd have oil prices spike. This would higher oil prices, more volatility causes risk assets to sell off, right? And Bitcoin is usually considered a very risky asset. At least that's how it usually behaves. So you'd expect traditional markets maybe to have what gold rally that's happening on hyperliquid gold, silver, along with oil up, tech
And then, yeah, risk assets like
tech down. Now, where does Bitcoin figure into that? Thus far, it hasn't gone down. That's very interesting.
yeah.
I think
So
yeah, go ahead.
it'll really be what happens with the markets opening on Monday. I think that's going to be extremely informative. If markets are down a lot while Bitcoin remains kind of flat, I think that's showing that, okay, something has changed here in the market structure for how people are viewing Bitcoin. If, however, market reaction is muted, equities markets reactions are muted on Monday, then it means, okay, like nothing's really changed. Bitcoin remains correlated, and it has continued its role as a canary in the coal mine.
Yeah, exactly. So that would be like the immediate kind of short term effects. I could also see a situation where, let's say, risk assets sell off hard on opening, for example. That could cause a little bit of a like forced liquidations. And I think if that happens at all, then it definitely, I'd imagine that brings down Bitcoin, right? Because you kind of want to cover and get rid of things that are the most liquid. And I imagine it would be whatever Bitcoin exposure you'd have. So I can imagine that kind of bringing down Bitcoin a little bit. So in the short term, maybe the best case scenario is that Bitcoin is choppy or flat, right? For the medium term, right? We don't know how long this conflict is going to last. It looks like in these early days that it's going to last longer than the last one, last time America was in Iran, dropping missiles and whatnot.
Yeah, when Trump issued the bomb
Ugh,
Iran.
jeez
That
almighty,
that
dude.
was what was that? July?
It's crazy. Yeah. That's right. Because I was going to Armenia. That was when it was in doubt. Crazy times.
Yeah, I mean, historically, what happens with these type of geopolitical conflicts is the S&P drops, I don't know, 5 to 10% in the week following the outbreak of conflict, but within a month or so after, it ends up being about flat, and then within a year, it's up again. Generally speaking, traditional markets react like the gut reaction down, but they bounce back.
Yeah. I think this would be different than some of the conflicts we saw last year though. Iran does make a lot of oil and Strait of Hormuz is really important. So if it's prolonged, then I think you have a risk of oil staying elevated. Now, apparently, again, I'm reading all this stuff. Apparently, OPEC Plus has indicated already that they would consider increasing supply to make up for um, the deficit of Iran, obviously not putting much onto the market. Still, though, if the strait is is being shut down, that's not going to matter that much, right?
How do you get the supply out?
Yeah, exactly. In a prolonged conflict, let's say this goes on for a month or so, I think you really have to worry then about inflation increasing. So you have inflation expectations already now getting priced higher. But if oil stays elevated, then obviously I think that cause inflation. And with headline inflation increasing, the likelihood that, for example, the U.S. Fed cuts rates goes down a bit, and then that would cause financial conditions to tighten. This is also usually not very good for risk assets like Bitcoin. That's one scenario. However, I don't know if you saw this, Graham. Arthur Hayes, just this morning, he released a new article called iOS Warfare. And in this article, he argues that a prolonged conflict would actually ultimately force the Fed to print more money because the U.S. would have to fund its war machine. And so we just have to start printing a lot of money for that. And in that case, he argues it would pump Bitcoin and gold and silver and all that kind of stuff. I think to me that's more approaching, I don't know, 3 to 6 months out, maybe. I don't know, something like that. God, can you imagine if this conflict goes on that long? That's wild to me. So that's also a possibility, and maybe that would be good for Bitcoin too.